Amateurs trade for excitement, and that's exactly why they fail. They want constant action, like they're sitting at a slot machine in Vegas. Every candle, every market move feels like a chance to hit big, and that thrill keeps them glued to the screen. Imagine this. Tesla jumps 5% in a single day. A beginner sees the spike and feels an instant rush of adrenaline. If I don't enter now, I'll miss it. They buy right at the top, convinced they're about to ride the wave. But the very next morning, the stock dips. Suddenly, fear replaces excitement. Their heart races, their confidence disappears, and in panic, they sell at a loss. What just happened? They weren't trading with a plan. They were gambling with emotions. This is the mindset trap most traders fall into, living for the short-term thrill. Every trade feels like life or death, and missing out feels unbearable. But successful traders, they play an entirely different game. They aren't looking for excitement. They're looking for consistency. Instead of asking, how much can I make today? They ask, if I repeat this process 100 times, what's the average outcome? That's the difference. Pros think in terms of probabilities, not single trades. Here's what that looks like in practice. If the setup isn't clear, they simply skip it. No frustration, no regret. Average traders feel restless when they aren't trading, as if they're losing opportunities. Pros, on the other hand, feel powerful because they know patience is their edge. They understand that waiting for the right setup is part of the game. Just like a professional poker player folds most hands until the odds are in their favor, a professional trader knows when not to act. The takeaway? Stop thinking like a gambler chasing thrills. Start thinking like an investor of probabilities. The market will always give you another chance, but only if you're disciplined enough to wait for it. Here's where most beginners go wrong. They hate taking losses. The moment a trade goes against them, they freeze. Instead of cutting the loss quickly, they convince themselves, it'll come back, just wait. But markets don't care about hope. Picture this. A trader buys a stock at $100. A few hours later, it slides to $95. They tell themselves it's just a pullback. Then it hits $90, then $85, and before they know it, they're staring at $80, holding a loss they never planned for. What should have been a small, manageable hit has now snowballed into a disaster. This happens because of something called loss aversion. In simple terms, the pain of losing $1 feels twice as strong as the joy of winning $1. That's why beginners are quick to book small profits, but terrified to accept small losses. And ironically, this behavior destroys their account faster than anything else. Successful traders think very differently. They know losses are not a personal failure, they're just the cost of doing business. Every pro trader has stop losses in place before they even enter the trade. They don't negotiate with themselves. If their rule says, I'm out if this trade drops 2%, they exit without hesitation. No emotion, no debate, no second guessing. Think about how Amazon was built. Jeff Bezos openly said he wasn't afraid of failing. He was afraid of not trying. Pros in the market follow that exact mindset. They'd rather take 10 small controlled losses than risk one catastrophic blowup, because they know survival is the key to compounding. The lesson here is simple. Stop treating losses as disasters. Start treating them as business expenses. Just like a store pays rent every month, traders pay losses to stay in the game. Accept them, move on, and let your winners define your success, not the fear of losing. Most beginners know their strategy, but the moment money is on the line, emotions take over. Fear, greed, and FOMO hijack their brain. Imagine this. Bitcoin suddenly shoots up on breaking news. A beginner scrolls through Twitter, sees everyone shouting, "Buy now," and panics. They jump in late, chasing the spike, but within hours, the price pulls back. Now they're trapped, holding at the top, wondering why this keeps happening to them. It's not the strategy that failed, it's their lack of control. This is what we call emotional trading. The average trader promises themselves, next time I'll stay disciplined. But when a red candle appears, panic whispers, exit now before it's too late. Or when a green candle runs strong, greed says, double your position, this is the one. Emotions will always find a way to break weak discipline. Successful traders know this, and that's why they don't rely on willpower, they rely on process. Before every trade, they follow a checklist. Entry price defined, stop loss locked in, target clear. If the trade doesn't meet the criteria, they don't touch it. No exceptions. Think of a pilot before takeoff. No matter how many flights they've flown, they never skip the checklist. Why? Because one missed step could be catastrophic. Trading works exactly the same way. This discipline builds consistency. A professional trader doesn't ask, "How do I feel about this setup?" They ask, "Does it fit my rules?" That's why pros can trade calmly while others panic, because they trust their process, not their emotions. The lesson is simple. Discipline beats emotions every single time. The market rewards structure, not impulse. If you want to trade like a pro, build a routine, stick to your rules, and let your process, not your feelings, decide your moves. Here's where the final shift happens, the difference in mindset about opportunities. Beginners often think the market is a scarce place. They believe every move is the big one, and if they miss it, they'll never get another chance. That's why you see them chasing green candles, buying late, or holding on to bad trades, terrified of being left behind. It's a scarcity mindset, the belief that opportunities are rare, so every single one feels like do or die. But the truth? The market is infinite. Every single day, billions of dollars move through stocks, forex, crypto, and options. New trends form, old ones collapse, patterns repeat. There is no last chance. Yet amateurs burn themselves out because they act like it's now or never. Successful traders flip this mindset on its head. They operate from abundance. They know there will always be another trade tomorrow, next week, or next month. Missing one doesn't matter. Chasing one isn't necessary. That freedom allows them to stay calm and selective. When you think in abundance, you stop forcing trades. You stop jumping into setups that don't fit your rules. And here's the best part. Your win rate goes up simply because you're no longer taking low-quality chances. Think of it like fishing. A beginner throws their net at every ripple in the water, wasting time and energy, catching little to nothing. A pro fisherman waits patiently, knows where the fish gather, and casts only when the moment is right. Trading is no different. The pros aren't hunting for every trade. They're waiting for the right ones. And this abundance mindset changes everything. It reduces stress, it builds confidence, it gives you the patience to protect your capital, and the clarity to scale your winners. That's why pros don't burn out. They let the game come to them, while beginners chase it until exhaustion. So if you take one thing away from this series, let it be this. Stop chasing, stop fearing, stop thinking opportunities are scarce. The market will always give you another chance. Your job is to be ready when it does. If this breakdown on trader psychology helped you, hit that subscribe button and turn on the bell icon so you don't miss the next video. And if you want to dive deeper, check out the other videos on this channel, because the more you learn to think like a pro, the closer you get to trading like one.